Welcome to the Kinvestor Report, where we sit down with analysts and industry experts to discuss mining, commodities, and the stock market. I'm your host, Arlen Hanson. This interview is not investment advice. It is for listening pleasure only, and I will disclose any positions owned by Kin or myself in this interview if we happen to talk about them today. This interview is not paid for, sponsored by, or marketed by any public company. Today, I'm joined by Craig Hemke, also known as Turd Ferguson, founder and publisher of TF Metals Report. His commentary is all over Zero Hedge, has a massive social following for his insights on the market. From what I've listened, he's smart as a whip and truly says how it is. So I'm really excited to dive into the market and what's been going on this week. Craig, thanks for joining me today. How you doing?
Arlen, it's a pleasure. It's great to finally get a chance to meet you and have a discussion.
Yeah, awesome. Well, lots of things have happened this week in the space. Particularly, I know Barrick had a huge day yesterday off their earnings. Finally, is this where we start seeing some leverage on these earnings? Like with all this inflation we've seen eating away at these margins, is it just because Barrick's a good operator, or now with gold prices where we are, we're going to start seeing earnings like this from some of the big boys?
Well, they should. There are some that can't seem to control their expenses, and it's like their sustaining costs just go up just as fast as the gold price.
Mhm.
But there are some that are a little better at it. So, it still pays to get some people that know what they're doing and hear what they have to say and do your own research and all that kind of stuff. But what's interesting about what has taken place here this week is this buyout, takeover, whatever you want to call it.
The Philo or the
Yeah,
Osisko, well, or both.
the Goldfield Osisko one.
Yeah,
Yeah.
yeah.
We all lament, at least those of us that have the physical metal and then try to have some fun with the shares. We all lament, the
Yeah.
shares just age you prematurely and drive you bananas, right? And I mean, there are a number of reasons for that, but at the end of the day, you need more buyers and sellers, right?
Yeah, yeah.
We need people wanting to invest in the sector because they think they can make some money at it, right?
Yeah.
And as long as they don't think they can make money, they're going to go on other places. Now you could get into an argument of growth and value and all that kind of stuff. And the mining shares are almost kind of like value stocks at this point because they generate so much cash flow and they increase their dividends and that kind of stuff. But what happened, we'll call it Sunday night, Monday, whenever that was announced, is you got this takeover that wasn't a stock transaction. It was cash and at a 50% plus premium. So all of a sudden, if you're a generalist, and you can understand, you kind of got a feeling maybe gold's not a bad deal and you want some mining shares, and all of a sudden you're making 55% overnight. Huh. Well, maybe we should start looking around here and see what else there might.
Could this happen again?
Yeah, exactly. Well, and
Yeah.
when it's interesting is we record this on Tuesday, that in reaction to all this in the Barrick earnings on Monday, the 12th, the GDX was up, a point, something like that. So
Yeah.
almost 3%. Well, today, gold and silver are sideways, GDX is up another 1.5%.
Mm-hmm.
It's so maybe that's anecdotal, maybe not, but I mean, I think maybe that's a sign of people looking.
Yeah, let's tap into that a little bit, right? Like in my experience, when we start seeing these equities move before gold prices, it's usually a little bit of a sign. Why is that? Why is that way? Is it because they're looking to the future and trying to get leverage on what's kind of coming? Like, tell my audience how that all works.
I that's generally has been the rule of thumb, that the shares would move first. But I'm not sure. I don't know if I've ever seen any kind of quantitative thing that measures that. It's like when I first started doing this back in like 2009 and 2010. There's a very nice man by the name of Harvey Organ who wrote a blog, and there weren't a whole lot of them around back then. I think he still does. But Harvey would always talk about, well, the mining shares went down late in the day, and so that means they're going to come and smash the gold and silver tomorrow. And I had a guy on my site that, went in and actually looked at every day, that happened. There was no correlation at all. What the mining shares do late in the day versus nothing. It's not true at all. But, that kind of sticks as like this, like urban legend kind of thing, urban. So, I don't know if we can kind of, say that the mining shares I don't know. I really don't know.
Maybe that's just as bulls like drinking the Kool-Aid and be like, okay, man, we got to find another reason to hold on to hope here.
But at the same time, I think there's something to be said for overall sentiment,
Yeah.
and people's willingness to put money in the sector, because it kind of breeds on itself. Hey, look, the mining shares are going up. That must mean the metals are going to go up. Then the metals do go up, and it's like, wow, and now let's look at the mining shares already going. Let's get into the mining shares. So there might be something to the sentiment of it all. If anything, though, I know we can agree that the shares relative to the gold price, the underperformance is just nauseating, and we hope to have that change.
I've been asking the same question. I'm not going to ask you because I keep asking it, but like, what is the disconnect? And just everyone's just like, oh my God, it's just, when's it going to change? What's it going to change? And I'm really hopeful that like some of this action we've seen here starts, one of my next questions, where does this money start going? Like after a Philo buyout or a Cisco buyout or Barrick having a huge day, where does that money start going? Does it start going into the bigger producers still? Like it's probably not generalist capital yet still,
Yeah. Yeah.
So like, when does it start flowing a little lower down?
Well, and that is something I think I can see we have seen over the years, in a cycle of bullish precious metal prices. It starts with the majors, the GDX moves up first, and then maybe the mid-tier move up after that. And then you really got to get cooking before exploration companies get going. And I mean, even today, I've got some money I put into an exploration managed account like 4 years ago that's down like 40%, even though the gold price is 2,400, because all those little things do is burn money, it seems, so many times, right? And dilute and have to raise cash. And anyway, we don't need to go down that path. But I do think the money comes into the majors first. And if anything, and again, anecdotal, but here's a story I like to tell. I got a friend of mine that works for Raymond James in Vancouver by the name of Bob Thompson.
Oh yeah, Bob.
And
Yeah, good old Bob.
yeah,
Actually, I gotta get Bob on the show. Hey Bob, if you're listening, you're next. You've already agreed. You're coming on.
Yeah, and he's a great guy.
Yeah.
But his focus is on the resource stocks, right? So a lot of times when I talk to him, I'll say, "Hey Bob, anybody knocking on your door lately looking for some names?" And he's like, "No, no." But when the other brokers in his office are like, "Hey Bob, I'm getting calls from my clients, man, and they want to know what can we get into?" Then it's kind of like a anecdotal barometer.
Yeah.
That things are picking up. But I still, geez, even at $2,500 gold, I know you don't feel like that's the case yet.
No, not yet. And but when it comes, we're still hopeful it comes fast and furious. Right?
Yeah.
This is what we're waiting for. This is what we're waiting
Yeah.
for, the setup, right?
And I don't know, again, it's hard to say what's going to take, part of me is when I first got started after college and all that, I mean, we're talking 34 years ago, I was a stockbroker for 6 or 7 years. And so I still kind of view things through that old lens, 60% stocks, 40% bonds, that kind of thing, but also growth and value. And the overall equity market is so growth oriented now. You used to kind of blend. We're going to have some utility stocks and some value stocks and yin and yang, and one will kind of balance the other. And we're going to try to make 15% a year. Well, now everybody's in growth. If you don't make 15% in a week, you're a dummy.
Yeah, you're dumb,
right?
dumb.
And so I just don't know if there's got to be kind of a change of mindset, to appreciate that. It's I'm sorry, I go off on all these different tangents.
This is awesome.
I apologize, but it's like Rick Rule started talking about uranium stocks 2 or 3 years ago, right? Yep. And I mean, that is a long story, right? And if you can rule a 72, double your money in 5 years by making 14% a year, that used to be a great deal. And I don't see why, if you go back to 2 or 3 years ago versus 2 or 3 years from now, a lot of the uranium stocks that Rick holds and other people have talked about are going to double or maybe more. But it's the in between where it's like people run out of patience. Nobody has the patience. Nobody wants to take the time anymore to understand what value is, understand what fundamentals are. They just want to get in NVIDIA and make, 10 points an hour and get back out. And I'm like, well, that's not investing. And I guess that's what we need to get back to, is more investing than trading.
Let's go to this uranium thing. And like, I followed that uranium well, I've all followed it from day one, and I've done very well with uranium. Thank you. And that run that we had, like it was so anticipated for so long, and so many people got so impatient, they finally threw in the towel, and like that's when it hit. It feels to me like the gold sector is kind of like that right now. It's like every fundamental screams undervalued. Every fundamental says we're going higher. Like, it's all intact and it's right there, but like nobody's jumping on it yet.
Yeah.
And I
Yeah.
just I just feel like it's going to start coming, right? And when it does, I think it's going to be pretty big. And that generalist money that you talked about earlier, you need more buyers and sellers.
Yeah.
And that will shift. And we all know like the total market cap of all the commodity stocks in the world is nothing. And when that buying power comes in, those returns can be quite phenomenal.
Right. Well,
Um,
I was just thinking, I don't mean to interrupt you. I'm sorry.
no,
Joe.
I talk too much on my own show. Like I do all the
It's
questions
okay.
and I
I
answer
do
my
the
own
same.
questions.
Dude, I
People
do
always
the same
complain about
thing.
me.
No, but just to that
Don't
one
care.
point, last Monday, the 5th, with the yen carry trade on one and all that stuff, what were the total equity loss? Was like $1.4 trillion or something. Total equity market
Yeah,
cap went down that day.
yeah.
And you think, oh my God, what would happen if you just carved off 10% of that, $140 billion, and plowed that into the precious metal? I mean, there's so much money
Well,
that none of it is dedicated to our sector.
well,
So it won't take much.
I talked to Bob Moriarty last week about this, and I was like, what was phenomenal about that, in my opinion? It was like literally a week earlier, Trump gets shot, Biden quits, and there's some Middle East tension that World War III is happening in 2 days, right? And the market barely went up a little bit or whatever. Then some of this news that came out was like, yeah, we've known the economy sucks for years. and,
Yeah.
and boom, just the market just got it just wiped out from under them. It was a day off in Canada, so I actually didn't even realize what was
Huh?
going on, to be quite honest. I took that family day and was like, thumbs off. And I woke up the next day, I was like, oh, I got some
Better use
damage
your
recovery.
time.
Copper. Let's go there quickly.
Yeah.
It's taken it on the chin in the last
Yeah.
45 days. Of course, after media, it was all over every headline. It's going to $5, going to seven. And I'm a big long-term copper bull, of course. I just see no new supply coming on. I see grades getting lower. I see costs getting higher. I see governments getting in the way, blah, blah, blah. It's going to become a metal that I think that people go to war over. But what's happened in the last 45 days for it to lose 25%?
Well, on the physical level, you've seen some of these stockpiles growing again. So maybe there's some of the bloom came off of Asian demand and that sort of thing. But on the pricing scheme, we've seen this before. I hear copper goes up, it starts making new all-time highs, would trade 517 a pound or something on May 17th. And you start hearing these stories about these companies, the big copper suppliers that are short, and there's even a story on Bloomberg that allegedly they were diverting tankers of copper ore, to the COMEX has like 9 copper vaults scattered around the country. It's not like they're just floating copper ore up the Hudson. It was just dumb. But what
Yeah.
happened is the CME raised margins on copper 4 times in 7 days. So you had these speculators rush in from 450 up to 5 and above 5. And then here come the margin hikes. And now all of a sudden you're underwater and you're getting margin calls and the price comes crashing back down. It broke the trend. And then it all starts just
Triggers
flittering.
more selling.
I mean, 2011, silver goes
Yeah.
to 48 and there's 5 margin hikes in 9 days. I mean, so it's not like, we haven't seen this play out before.
Did they ever
So
reduce the margin requirements at the
yes,
bottom?
yeah, they do.
Okay.
They
All right.
actually do. Usually when volatility then comes back down, then they'll say, okay, we can cut it back down to, but they always blame it on volatility. Of course, it's always upside volatility. But nonetheless, I digress. So you had what appears to be maybe a lessening of physical demand out of the East. At the same time, you get these margin hikes and the speculators get flushed back out. Now price comes back down. That then led me to be worried about silver because they kind of move up in tandem. And now copper's down and has been down maybe 20% from its highs. And for a while, silver was only down 10. And I kept telling people on my side, it's like, I'm kind of a little worried that that other 10% is coming. Then lo and behold, we went to what, 2650 or something last week. The way I look at it, and again, I just try to keep it simple. I think of you got gold as a monetary metal on one side of like a teeter totter. And it's just a monetary metal. Hey, okay, a little bit of electronic demand or whatever, but it's a monetary metal. Then you got copper on the other hand, that is fully an industrial metal.
Mm-hmm.
And then silver is an industrial metal, but it's got, people invest in it and hold it. There's still kind of an investment component. And so it's like a teeter-totter, right? You got gold on one side, you got copper on the other, and silver's right in the middle.
Mm-hmm.
If gold goes up and copper goes down, silver's not going to do much. I mean, it's got gold kind of pulling it up, but copper kind of pushing it down. Get them both,
This is
get them both to
really
go up. Like May and April,
yeah.
gold and copper are both going up and silver explodes. So you kind of need to get the investors, the hedge funds, the home office accounts, and all that to be buying silver futures. You kind of need gold and copper to go up at the same time. That's why we're keeping an eye on it.
Ooh, I'm thankful that you brought that up. I've never looked at it that way. I've always tried to decide, okay, like where does silver fit in? Right.
Yeah.
And it's changed, right? It really has changed with
Right.
the industrial uses and
Right.
so that's interesting. You called a very volatile year for gold at the beginning of the year.
Yeah.
And
Yeah.
you hit it on the head, buddy. You hit it on the head.
Well, that was a pretty easy one.
Well, yeah, but right. Well, is the rest of the year easy to call? Like, is the market already pricing in these lower interest rates and all
Yeah.
these things for gold? So are we kind of now, is there a little bit more bearish case for gold up here? Like, where do you think the next 6 months looks like?
Well, I thought last year, I figured the U.S. would be in a pretty visible recession by the second quarter.
Mm-hmm.
And so I thought, okay, well, gold will have broken out. Once it got, it's in that consolidation for 3.5 years, where it can't get above 2000. And it's like, well, the good thing about that is that everybody sees it. And so when it does break out, shorts get covered, everybody piles in and you usually get a 10% pop at a minimum. And so I thought, well, that was going to come last year. And then it tried. And then, as we ended last year, we were still under 2000. And I thought, maybe that recession's been put off for 6 months. So maybe in the back half of this coming year, we'll make that run. Well, and then how crazy is that we dial back the rate cut expectations in the first half of this year. Interest rates are actually rising. The dollar index is rising and gold breaks out anyway. So
you're right. Yeah. You're right.
You could make the case that, I mean, I'm open to hearing the case that gold anticipated that. And now that we're in this point of, rate cuts are coming, that now gold's just going to go sideways. Okay. I mean, that's what it's been doing for 4 months.
Mm-hmm.
But gold's also now threatening to bust out of a range that everybody sees. Again, I mean, this is its fifth attempt up to near 2,500. One of these times it's going to break out and you're going to get the stops that get covered the shorts that get covered, the buy stops. You're going to get new speculative buying and I don't know how you do technical analysis on a price that's where you've never been here before, but there's guys that do that think, like 2,700 is the next target. So I can see that too.
I love those charts, by the way. Okay, well, that's an all-time high. So we can go 400 times higher than your uranium stocks. What?
Right. I mean, you give me a silver chart, right? And you can look at it and go, okay, once you get above 28, then it's logical that maybe 30, 32. And then if you get above there, it's 34, 36, because those were the support levels back in 2011 and 12. And you can look at that and you go, okay, I can see that. But you're talking $2,500. We never had $2,500 gold before. So I don't know how you pull 20, well, from here, hard to say.
It's the bullshit that we want to tell ourselves.
Well,
right? Like,
yeah. And, yes. And there's a lot more that goes into, and that's the kind of the technical analysis is almost, it's like a science or an applied science where I think predicting prices of things is more of an art. You kind of got to take a whole bunch of things, especially in gold, for God's sake. You got politics and geopolitics and monetary policy and economics and all these other things that you got to try to factor in, that you can't just look at a dot on a screen and go, now it's going from here to there because of my wave count or something. But again, there are things that you can consider. Like this idea that, if you break out, you're going to run some sell stops, you're going to get new people excited. That should be good for 5 or 10%.
Yeah.
So, okay, maybe that's where we're going next. We'll see.
Yeah.
We'll see.
Can you tell us a little bit about your TF Metals report? So what are you providing for your subscribers? What kind of names do you look at in general? Or are you looking at big caps, ETFs? Just give us a little bit more flavor.
Well, it's a website, first and foremost, built around the idea that, I mean, most everybody knows who John Maynard Keynes is, right? He's the kind of 30s and 40s era economist that fancied this idea of like a debt-based monetary system. And about 2009, I was posting on Zero Hedge, and I came up with this idea that we're living at the end of the great Keynesian experiment. And that has been kind of the tagline of the site since it began. I don't know when the Keynesian experiment ends. I mean, I gotta be, you think we're getting close, when it all begins to go exponential.
Yeah. So
we've been preparing for that, everybody at the site. So precious metals ownership is part and parcel to that. That's your
physical.
Yes. Physical precious metal.
Good.
That's the vehicle that gets you from point A to point B through the storm, right? That's your safe harbor. And so that's the basics of what the site is about. But in between, we try to do analysis every day. Like, here silver was coming, like I said, copper's down, so maybe silver's going to come down. So let's not, if you're thinking about buying a tube of Eagles this month at 29, maybe you give it a couple of weeks and maybe you can pick it up at 27, save you a couple of bucks. So there's some analysis that goes along with that too. Regarding the mining shares, so many precious metal enthusiasts own mining shares, right?
Yep, of course.
Leverage the price.
We think there's leverage and liquidity, right?
Leverage. We're going to make some fiat, and then we're going to cash that out, and we're going to buy even more metal. And again, we talk about a challenge of investing and trying to figure out where the prices are going. But I own them too. For the members of this, I mean, it's $15 a month to join my site, so it's not like it's this crazy thing. But people that are on my site, they can see the ones I own. I mean, I can't tell them which ones don't, but I talk about the ones I own. I'm at this point in time, I still have, like I mentioned, that managed account of exploration companies. I got one of those that, it isn't going anywhere. And I got my own little ones that maybe I know, or I've come to know that somebody at the company, the CEO or something that I've interviewed over time. And I thought, well, that's a good idea. And then
we'll know it's a good idea in a year.
Right. There will be a time again when, but I mean, the main ones that I own, I think that there are big companies that are just like all big companies, man. They got all these different executives in charge and commissions or committees in charge of such and such. And it's just all expenses that keeps them, holds back their profits. So I focus more the, like, for my own investing, more like the mid-major ones.
Okay.
The ones that they're not so bloated yet with all these different departments and executives and junior vice presidents and senior vice presidents and associate vice presidents and all this kind of crap.
So
they're just out there. They got a good resource. They got a plan. They can get the stuff out of the ground. So those are the ones that I try. I mean, I'm not saying that's the right way to do it. Those are just the ones that I own, and I make sure everyone knows which ones those are.
Okay, cool. Well, we'll certainly put a link to your website on our channel. I can't wait to have you back on too in like 6 months.
Please.
Or something. Yeah. The next time the Dow falls 1,000, I'll ring you up and be like, all right, buddy, let's go.
Well, I'd be happy to do it. You mentioned, I could tell from one of your questions, you'd read my annual forecast that I wrote back in January. Yeah. I do that every January, and I start thinking about it in, November and December. And honestly, I do it only for me. People think because, and the reason I do it, and I got in the practice doing this 7 or 8 years ago, is because life comes at you so fast and you're so busy that as you get deeper in the year, you forget all the crap, that you were thinking about 8, 9 months ago. And why was I so optimistic when this year began? And now I'm getting my ass kicked. You know what I mean?
Yeah, that's a really good point, right? Because we do get fear and greed. and our emotions do
Right.
get in the way at certain periods of times,
Right.
right? Or all the
Right.
time, let's be honest,
And we
right?
have to learn. And if
Yeah,
you don't learn from your mistakes, then,
you're
then
doomed.
your mistakes aren't helpful. So I write all this crap down in January so that then I can go back at the end of the year and see what I got wrong. That's what those forecasts are for. I mean, I do a reasonably good job, but I want to know, okay, what did I screw up? All right, what I
Mhm.
like the forecast for 23. I thought, commodity demand was going to surge in China, and I thought the economy here was going to roll over. And all. Like, well, that didn't happen. But boy, in January 23, it sure looked like it was gonna. So anyway, I bring all this up. There'll be another one in January. So
Well,
yeah, by
awesome.
6 months from now, you want to talk again, and we'll get her done.
And well, you can pick my brain and I'll tell you what to write down. I'm kidding.
Yeah, right. Don't you feel
It's
that
the
way?
TF Metals Report featuring Arlen Hanson.
Well, that's what
Zero reads.
this freaking sector will do that to you. It makes you like doubt everything you ever learned to know because it's so counterintuitive sometimes.
Oh, I feel so
But
crazy sometimes, right? Like
yeah,
beating the bush on you gotta own your physical, you gotta own your
right.
physical. And I just feel like I'm the lonely guy screaming in the wind sometimes, right? So
Right.
it's nice to talk to like-minded crazies,
That's
right?
that's a good way to put it.
Right on. Thanks so much. And I'll just to all my listeners, thanks for joining the show today. We'll make sure we get a link to the TF Metals Report and Craig. And if you haven't already, be sure to join our Kinvestor network. We do conferences every quarter or so, which we'll put some information on that too as well for all that. And until next time,
Terrific.
thanks so
Thank you.
much.
It's a pleasure to make your acquaintance, Erlen. I look forward to visiting again sometime.
Yeah, right on. Take care.